How much of a weight on this market was the Australian dollar today? Because while the strength, as we know, is good for those travelling overseas, it's not always a very good thing for the local market.
Nadine, I think there were a number of factors in play today, and one was the very high Australian dollar. The Aussie dollar overnight hitting a high of 107.5, and that of course has an impact on things like the manufacturing sector, the healthcare sector, which sources so much of its revenue offshore, as well as the retailers, because they do see price deflation come into play, as well as competition from offshore websites as well. So we did see stocks like Harvey Norman down by 4.7%, but I think part of the reason why we did see a subdued session today is that it's been an extraordinary week with an extraordinary performance. We have a look at the weekly return of the Australian share market, 5.1% for the week, and we haven't seen this type of weekly performance in more than 2 years. In fact, since 2000, we've only seen 7 times where the market has managed a weekly performance of greater than 5%. And if I can bring up a longer term chart of the Australian share market the last 10 years and have a look at where those 5% plus performances occurred, it was all within this box here. So if we have a look at the extraordinary volatility on the upside, it was an increase of more than 5%, but that's more associated with extraordinary times, and it has been an extraordinary week. We have a look at the market, still processing some of those details from the plan for a plan from Europe this week, and of course those voluntary haircuts, the 50% voluntary haircut for Greece debt, which actually isn't voluntary. And in fact, if you drill down the details, I guess the market's starting to have a little bit of concern around the details. The 50% haircut is for private creditors, so that doesn't include the Troika or the ECB, so that rules out about $145 billion worth of 350 billion euros worth of debt. So it's only about 200 billion euros that haircut will apply to. So the market's still processing the details there, but the fact is we've had an extraordinary run and some of that heat coming through, but we've stopped to see some follow-through buying today. So a little bit of warning sign for technical traders. We'll have to wait till next week to see how that impacts on the market.
Yeah, I hate to be, in the United States, talk of QE3. Are you watching that with much interest, especially in light of that GDP read that we saw last night that came in at 2.5%, and by all accounts, really putting those fears of a double dip at least to one side for now?
Well, the numbers have been better coming out of the US, whether it's things like housing starts, retail sales, or the GDP numbers that we saw out of the US. We have seen the numbers supporting a low growth environment in the US rather than a recession. The FOMC meeting is going to be interesting, given a number of members there have come out to talk about the potential for QE3 or buying of more MBS, so helping to support the housing market there. But I guess here in Australia, we'll also see our own Reserve Bank meeting on Tuesday. Now, the 30-day interbank futures were pricing in a 100% chance of a rate cut on Tuesday, but now it's pricing in an 80% chance given the news flow that's come out of Europe. So that's going to be watched very closely by the markets. Of course, a rate cut would be seen as a positive for the Australian share market, a negative for the Australian dollar, but a positive for companies overall on the Australian share market. So that's going to be an important event domestically. Offshore in the US, the FOMC meeting, and then on Friday we also see the non-farm payroll numbers, and then in China we see the PMI manufacturing numbers coming out on Monday as well, so that's going to be watched, especially by the commodity space.